India's index of industrial production, that is the IIP, has rebounded in November, growing by 6.7% after faltering in October, which was pretty flat, last month. And it's a big jump there. I'm being joined by DK Pant, Chief Economist, India Ratings, on the show to discuss further. Welcome to the show, Mr. Pant.
Thank you.
So, Mr. Pant, what does this expansion mean in the current economic scenario?
Look, we have to be a bit careful because IIP still we are measuring in 2011-12 basis. And it is giving a good number because after the the growth we have seen in IIP in the month, the 6.7%, that is achieved after a gap of maybe more than 2 years. The last time we had a better growth was in October 23 when it grew by 11.9%. Now, if you look at the component-wise, which is giving a good, and the best thing is if you look at the consumer non-durables, which had been the growth where the growth was lagging from a long time, and it either remains in the negative territory or minor positive. Where we had seen that IIP in the non-durable and consumer non-durable has grown by 7.3%. And again, if I see this number is again after October 23, we had seen this kind of growth. Otherwise, it has been negative or barely positive. Now, if we look at consumer non-durable, and what can we observe from it? See, this number is for the month of November. So it gives an anecdotal evidence that whatever was the high demand in the month of October, be it the festive, be it the post GST rationalization, most of the stocks which the wholesaler were holding, those stocks or the company's own inventory has been sold. Now they are again producing and keeping stocks for the future demand. However, I will be very cautious to term it as the economic or industrial recovery. Yes, all the indicators, whether all sectors, whether I look at capital goods, intermediate goods, or the infrastructure goods, durable, everybody has grown except the primary goods. Everyone has shown good growth, but we have to be watchful and observe this trend. If this trend continues for another, say, 2-3 months at least, or till end of the fiscal, then we can say like the industrial recovery is there. But before that, this number has to be watched very carefully and take a cautious view on this.
Okay, Mr. Pant. So can we call it a one-off spike, or do you really see it as a start of a sustained industrial recovery there?
As I said earlier, unless we observe this kind of growth for, say, next couple of months, then only we can say it's a broad-based recovery or it's an industrial recovery. Otherwise, till that we have to say it's a one-off, because we had seen in the past also we had 5-6% growth, and the next month that growth used to fizzle out. So okay. Is it the same? So we have to be watchful for some time.
Okay, and also, what does this really mean for the corporate earnings as well, especially for the industrials, manufacturing-linked stocks?
Look, I will not be able to say that anything about the stock, but yeah, if we talk about the corporate earnings. So this shows that the volume is there, but you have to look, when we look at the corporate numbers, these are all nominal values. It's the monetary value. Now, a jump in volume by 6.7% growth will be able to take care of some of the negative, because we have seen the WPI has remained in negative. Some of that price issue it will take care of. But yeah, the chances are that if this trend continues, this shows us the demand is there in the system. The economy is having demand, and which will be reflected on the corporate earning or corporate balance sheet. So if this trend continues, we will continue to see. It is likely that we will see a good corporate earning also.
Okay. So, like you said that, the next few quarters will be likely to be watched, and then only, we can really say whether it's a sustained approach or it's just like a one-time off spike. But does this prove, Mr. Pant, that, economic momentum will continue in the second half of the year as well?
It is expected that the momentum which had started in the first half. So what we have in the second half, we have one favorable, one unfavorable event. So the unfavorable started sometime in September or so when we had the tariff on by the US. But the GST rationalization is the one which is the favorable. Now, depending on how things pan out, but if this number, if the trend continues even at say 4% or so, then we believe that the economic growth activity in the economy or economic activity in the economy will continue to increase. So what we may have from very high first half growth, economic growth, the growth in second half may come down somewhere between 6.5% and 7% mainly because of the base effect. But the economic activity will continue. And one point I want to put it here is the resilience of Indian economy has gone up significantly. Because if you talk to any old watcher of Indian economy, those who are looking at observing at 3 decades or 3.5 decades, over the years, be it the monsoon, be it the oil price, be it the any external imbalances, forgot to it because there was no economic activity. So we have been able to withstand the shock of monsoon. We have been able to withstand currency shock. We have been able to withstand even the numbers are the way the export numbers are coming. The high tariff also. It appears that economy is on a strong footing. The low inflation, which is expected to continue till first half of the next fiscal. And post that also it is unlikely that it will go beyond RBI's estimate or RBI's 4%, RBI's target of 4%.
Yes.
We see the economy continue to do well, not only in second half of this fiscal, but chances are that even in next fiscal also, the economy will continue to perform.
Okay. Thank you so much for that, Mr. Pant. And, certainly rightly pointed out that Indian economy, is on a good and strong footing currently. Thank you so much for being there with us on the show.